Why does the current investment environment remind me so much of the 1980s? Which Fang technology stock might be the best stock to invest in right now? Which Chinese stocks, emerging market stocks, and gold stocks am I looking at right now as possible investments? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone, in this video I'm going to tell you how I think this is sort of like the 1980s where interest rates are high, but somehow we're going to muddle through this inflation. There's aspects of it that look a lot like the 1980s, where inflation was running high, interest rates were high, but somehow the market had its bumps and bruises, but kept tending to go up. It had some dramatic downturns, but it always spiked back up. Now, I don't know if it's going to be as resilient, and I think the recovery might be slower, but we're probably less inclined to have extremes. I think interest rates they're trying to raise it to like the perfect level. I think they want to get above 5% and hope that works. And they're going to tune it in at 25 basis points at a time and try to go 5.25, 5.5, maybe 5.75, and then just hold it. And just the fact of holding it, hoping that inflation will come down. And there's signs that might happen. Right now, the Fang stocks are very interesting, the Fang technology stocks, and they're preparing for a recession. Now, is this recession going to occur? Now, most people think we're going to have a mild recession, but the fourth quarter of 2022, we had 4.1% gross domestic product. That's actually pretty good. So it might be far less worse than we think it's going to happen. But the Fangs are preparing for this. Google is cutting 10,000 jobs. Microsoft is cutting 12,000 jobs. And Amazon is cutting 18,000 jobs. So you have this going on, but the best Fang of all might be Meta, which was previously known as Facebook. They're going to cut 13% of their workforce. This is massive. But whether the recession occurs or not, they're going to be in better shape for having cut the jobs, because right now the market isn't worried about what research you're doing for the future. They're worried about your surviving through a possible recession, and all the Fangs are taking the steps to do this. And Tesla in particular has been particularly brilliant at doing this. Elon Musk has been playing this business cycle like a harp. He raised prices on the different models of Tesla consistently over the last 2 years. Okay. So then Congress came out with an energy savings bill, and part of that was to give a $7,500 credit towards new electrified automobiles, okay? And so Musk kept raising the prices, and Congress and Biden decided that, well, if you can get the price somewhere below 53,000, it's somewhere around there, we will give you this $7,500 credit, okay? Okay, so Musk kept inflating the prices, and then Congress puts in this like $53,000 limit that you have to get your price below that. So Musk is able to cut the price by 20%, okay? And then, so you get the 20% credit that Musk is cutting the prices by on Tesla, and he just did this recently, which puts it below the price cap for some Model 3s and some Model Ys. And then you get a $7,500 energy credit on top of that. Hey, suddenly there's a whole new class of people that are able to buy a Tesla. A lot more of the middle class can afford a Tesla now. It's a work of genius, okay? But the recession is still looming. It's hard to know how much they're going to make it through this. I think Tesla, I think it's just a wild card, okay? And if you believe in Tesla, you're going to buy more of it. If you don't believe in it so much, there's other ones that are more attractive. And I'm particularly impressed with Meta, although the metaverse, you have your doubts about it. One thing that gives you doubts is why haven't they been able to put legs on the characters in the metaverse? They've been able to do it sometimes and sometimes not. I'm a little confused with that, and they will get that problem solved, I'm sure. But it makes you a little less enthused about it, let's say. But let's look at a chart of how the different fangs compare. So looking at this chart as to how the fangs have recently done, we can see that Meta has done the best. It's up about almost 6%, followed by Microsoft, which is up almost 2% in the last 3 months. Google and Apple are following. Google's at a minus 2%, while Apple's at about a minus 4%. I expect Apple just to kind of follow the market. I don't expect any big upturn or downturn with Apple. But the ones I'm concerned about are Tesla and Amazon, as Amazon has lost almost 16%, while Tesla in the last 3 months has lost 38%. And I think they've lost about 69% on the year, at least over 60% in the last year. The thing Tesla is doing is a long-term strategy. It's basically what they're doing is they're taking. They had such an excellent margin they had such an increased margin that they could afford to decrease their margin of profit and go for market share. And that's what's going to make them so competitive, is that they will have increased market share. But it is a long-term strategy. And in a recession, people aren't worried about long-term. They're worried about your survival now. What are the numbers you're putting out now? They don't care about the robots of the future. Autonomous driving is a ways off. It's going to come into being, but it's going to be a while before it's perfected. During a recession, they want to know, what do you have now that's producing profit? And so it's a long-term strategy, and it'll be a while before Tesla recovers. Over the years, the question has been asked, is Tesla a car company or a technology company? And the answer is, during a bull market, Tesla is a technology company, and we're interested in its long-range plans. During a bear market, Tesla is a car company, and we're interested in what they can produce money now for Tesla. And during a bear market, that would be its cars. So it's a car company during a bear market. China is becoming a rapidly developing country, so it's hard to think of it as an emerging economy. but it is an emerging economy because of its recent history of emerging from their health lockdowns. Okay, so that's the biggest factor propelling the Chinese stocks upwards. I'm investing in a triple leverage bullish fund on the Chinese stocks, and that's yen, YINN. It's a triple leverage bullish fund on Chinese stocks, and it's done very well. Let's take a look at the chart. And as we look at the year-to-date chart on yen, we can see that it's made 37% since the beginning of the year. The year-to-date is 37%. Wow. Okay, in the last year, it's ranged anywhere from about 19 to 194. So this is definitely something typically to get in and make a quick profit and get out. So I'm in it for the ride as long as it keeps going up. I will accept its results as long as it keeps going up, right? So it's going to be a wild ride, and I may get kicked out too early, but I'm going to try to stick with it a little bit just because I think there's other things going on as well that will propel it forward. And one is the drop of the U.S. dollar. Some are predicting that the value of the dollar could drop 50% from its recent highs. So it's something to look at. It's something to trade. It's something exciting. I'm going to stick with it for at least a while. Looking at this chart of the U.S. dollar index, we can see that now it's at 102. It was at 114 in early September. So that's quite a drop. What is that? A 12% drop in like 3 months, three and a half months, I guess. So it's dropped quite a bit, but the U.S. dollar has been ranging quite a bit in the last year. In the last year, it's gone from anywhere from 95 to 114, but it is on a path to dropping. And the fact that when we raise our interest rates, that makes the dollar stronger. But it's also the case that the value of the U.S. dollar is relative. It's all relative, man, as they say. When other countries raise their interest rates, the value of our dollar comes down, and other countries are raising their interest rates because they want to get rid of inflation too. So it's predicted that the U.S. dollar will continue to drop. And as the dollar drops, other countries are wanting to hold gold more, which leads to another investment, gold. First, I want to explain the situation with gold. Things have changed with gold. I think gold is like above 1800. It's been between 1800 and 1900. Hopefully going towards 2000. I think it eventually could go towards 5,000. Okay, that's my super bullishness on gold. And banks like to hold, central banks of countries like to hold a certain amount of gold to back up their currency. The gold standard for the amount of gold to back up your currency is like 40%. And a lot of countries do not have that much gold in their reserves. But to back up their currencies and to get away from the U.S. dollar, they're trying to bring their reserves up, their gold reserves up to 40%, to back up the backing up of their currency to 40%. And until 2019, the only tier one investment that central banks specified that you could hold was the U.S. dollar. in 2019 that changed. That yes, the U.S. dollar was a tier one reserve that you could hold, but also they made gold a tier one investment that banks could hold. That gold would be as good as the U.S. dollar. But with the recent sanctions the United States has against Russia, other countries are looking at this and saying, geez, we could be thrown out of the economic system, which the United States has more or less done to Russia. And China has been buying all kinds of gold, as Russia has, and a lot of other central banks, such as Turkey, are also buying gold. And it's this effort to get away from the U.S. dollar. What they want to do is they want to switch to the Chinese yuan. That's Y-U-A-N. And they want to make that the currency that they trade in because they get a much better exchange rate on it, because the yuan is a much weaker currency. And Saudi Arabia and Nigeria have allowed the Chinese yuan to be used in buying petroleum. They've done that with China, and Nigeria has done that with China. And China has set up a gold exchange where you can exchange the yuan for gold. So I think there's been a lot of central banks buying gold and trying to get away from the U.S. dollar. They want to make the yuan the other option to the United States dollar. And Russia and China, particularly China, are in the forefront of this, and they are buying all kinds of gold. Looking at this chart, this shows you the two gold investments I consider. I own shares of NUGT, which is a triple leverage bullish fund on the gold miners index. In the last 3 months, it's made 87%. Wow. Okay. GLD is the Spider gold shares. It's based on the price of gold bullion, and that's gone up about 18%. The gold bullion one is in blue, and the NUGT is in green. But, this is a very positive price movement, and I expect more of the same in the future. As the value of the dollar goes down, emerging markets tend to do better. And I like to trade a stock, Taiwan Semiconductor Manufacturing Company. Its symbol is TSM, and it's done well, and it's going to continue to do well. It's based in Taiwan, of course, but it trades sort of like a Chinese company, but it's not Chinese. It's in Taiwan. And I noticed that a lot of emerging market ETFs have included TSM in their portfolio. Let me show you a chart of TSM along with two emerging market ETFs that I would consider. TSM is a major company. It has a 472 billion market capitalization. It has excellent price to earnings of 15. That's the trailing price to earnings. Its earnings growth rate is about 23%, which is excellent. And it's owned also by Warren Buffett, so that's a strong positive for it in my view. And it has two factories in the United States, which decreases the risk if China would invade Taiwan. And I don't think China would upset the TSM's operation. They're already capitalistic as far as their economy goes. They have the Communist Party running things, but they allow capitalism. And I imagine they would allow the same thing with TSM if they invaded Taiwan. So I think that's a decreased risk, and especially with having two factories in the United States, which incidentally are built in Phoenix near me. So I see this as a very positive stock. And lastly, I'll leave you with two emerging markets ETFs that each have TSM as a major holding in their portfolio. One is iShares Emerging Markets, whose symbol is EEM, and the other is Vanguard Emerging Markets, whose symbol is VWO. And looking at the chart, you can see that EEM, which is the iShares Emerging Markets, which is in green, has made about 20%, and the Vanguard Emerging Markets, whose symbol is VWO, and that's in blue, has made about 17%. So they're of similar quality. I included Vanguard because I know a lot of people like to trade the Vanguard funds. It's a consideration to consider it for your portfolio if you're into that. But I think the drop of the United States dollar and the movement towards other countries raising their interest rates is going to lower the value of the dollar, which propels emerging markets higher. So what is my viewpoint and prediction for what the stock market's going to do? Probably. I think we're going to continue to muddle forward and muddle upwards, and there's going to be these drops and rises, and I think we'll slowly go up, and I expect that to continue for some time because the Federal Reserve cannot raise interest rates as high as they did in the 1980s because we have 31 trillion in debt, and the interest rate on that would just balloon the national debt too much. So they're not going to do that. But what they can do is raise it to a certain level and hold it for a lot longer than they did in the past. And so I expect that we're going to have 2 or 3 years of sort of muddling forward, and it's going to be a stock picker's market. And I think some of the picks I've given you today are part of that muddling forward. At least I hope so. Thanks for listening and watching. Be sure to smash the like button and be sure to subscribe if you haven't done that already. Plus, hit the notification bell if you want to be notified. That's the way I roll. That's all I got. Thanks a lot.